Hi, this is Acme with the Bulletin Board Heroes here at Vox Markets for Friday, the 25th of March. And too many stocks to choose from at the moment, so I've put most of them in actually rather than taking them out because it takes more time to try and choose which ones to put in and out. But starting off with Aura here, where we've broken that line of resistance there from September, around 16 pence above that, looking for the top of that channel from September as high as 24 pence, perhaps as soon as the end of next month. And bullish really while we hold above the 14 pence area and that uptrend line from back in the autumn. One of the punters' favourites is Bidstack rather. Here we've got a situation where we have broken out nicely above the 50-day moving average and neckline resistance around 3.6 pence. We have been looking for up to 6.5 pence by the next month, and you could actually upgrade that a little bit as well, depending on where that resistance line is. A better target maybe for some is 8 pence to shoot for over the next 1 to 2 months. That would be quite a result. Positive factors here, that bullish divergence line in the RSI window, which has been in place since September, so a long-standing feature. And also the way that the 200-day moving average is starting to rise, which suggests a positive change of trend. Normally a good sign when a company which is raising money sees its shares holding well above the placing price, which I think from memory in the case of Cyanconode is 14 pence. Just breaking that 200-day moving average at 16.5 at the moment. End of day close and weekly close above that could get the shares back on their way towards, February resistance around 21 pence over the next few weeks. Big picture target here, though, could be quite impressive, either up to the first resistance line there, up to 35 pence. Maybe on a 2 to 3 month view, and then maybe a year-end target up to 45. But at least let's go for the low 20s first, while we hold above the 13 to 14 pence area. Somebody's asked on Twitter what I think of Diurnal, and well, it's not the sort of stock I'd like to get involved in maybe on a regular basis. Here we do have some element of bullish divergence. So we had that low there in March, and the RSI was down to under 5 actually. So really oversold there. Much lower for second half of the month, but the RSI higher on this occasion. So at 13 is the floor, 12 to 13. So that bullish divergence could mean that the shares do have a little bit of a dead cat bounce. Favorite area for any bounce, if we have one, because we might not actually have one, would be maybe half the fall that we've had there from on that big down day on the 22nd of March earlier in the week, maybe up to sort of 22, 24 pence, something like that. But as I said, that's a best case scenario target, and bullish divergence, although it normally works, doesn't always work. On to a stock which is rather more smooth and predictable at the moment, Eco Atlantic. Good to see the shares have seen the top of that channel there, just shy of 43 pence, and sort of come back a little bit now, but the top of the channel there up to 46, 47 pence, and that could be seen over the next 2 to 4 weeks, especially while we hold above the old February peak there at 38. So above 38, looking for 46, 47 on Eco Atlantic. On to Galantis, which is also doing well at the moment in terms of the gap higher that we've had. It's sort of a gap close buy signal was there earlier in the week on Wednesday, with the end of day close above the 50-day moving average. So that kind of worked, and we've had 2 gaps now to the upside. It does suggest that the bears have been caught off guard, or maybe even the bulls have been caught off guard here. Rising trend channel from this time last year, top of the channel heading towards 50 pence. And that could be hit by the end of next month, especially if we hold above the floor of the latest gap around 32 pence. So let's see if Galantis lives up to its technical promise. Onto Goldstone, and here we've had a decent bounce off recent lows. Also a bear trap from below the September low there at 8.5 and above 8.5. Looking for a retest of 14 pence maybe by the end of next month. We do have a resistance line projection from last year, which is heading towards the 20 pence area, but let's just go for 14 pence or so over the next few weeks. I think that would be a result, given that the shares have come off their lows. Only back below 8 pence, really, obviously delaying the upside scenario. On to Hemogenics, which responded well to a recent interview with the company gave. Shares back up again now, sort of failed just below the 200-day moving average, and that is key actually for the shares, so that's at 1.8 pence. If you're cautious on the stock, maybe you'd be waiting for that to break before you targeted the top of that broadening triangle from the autumn at 2.4 pence. Been nice to see an end of day close above the 50-day moving average today at 1.55 or so, just to give the shares a positive glow. But we've got that slingshot bounce off the RSI support line there, which could still support the shares for a fresh attempt at the 200-day moving average over the next week or two. Fertilizers are big at the moment, so Harvest Minerals reaping the benefits of that. Here we've got the shares making further progress. we've had a couple of targets before, 10p and then around 12 pence, but the view now is that while we're above 12 pence, looking for as high as 18 or 19 pence over the next 2 to 4 weeks on Harvest, and the trajectory there suggests that we could actually get much more over the near term. Nice to see Blue Jay recovering. I think it was an announcement today. Has caused the share, well, even ahead of it, the shares broke the resistance line there from August down the 50-day moving average at 8 pence. That does suggest that we can head up to 12 pence or so, which is post-September resistance, relatively easily, especially after the March bear trap below 7.5 pence, which is a bear trap below April 2021 support. So things looking especially good there above the 7.5 to 8 pence zone. Stock which I think has fired the imagination of some investors at the moment is Live Company, and here we've got a nice V-shaped bull flag. Not quite sure whether it's a golden cross or not, but looking pretty good as on the moving averages, and an uptrend line in the RSI window, and the shares have bounced above that in terms of the RSI. In fact, the shares are moving up as I speak. We had an initial target here up to 7.25 pence, which hopefully will be seen in the next week or two. If you're a fan of the shares and looking for greater glory, then you could argue that the shares are in a rising trend channel, a steeper trend channel that the sort of trajectory that we've been in so far, and that's heading for 8.5 maybe over the next 1 to 2 months for Live Company. Upside valid, especially while we hold above the 5 pence zone, which is recent support. On to Open Orphan, which has delivered yet another £5 million contract. These are adding up now quite nicely. We've got a broadening triangle pattern here. We've been sort of searching for support, especially earlier this month, but looks like that's been found. We've got a higher low there and a gap today above offer higher lows as well. So that does suggest that at least the 11-12 pence zone is a lasting support. If you're fussy, though, you wait for an end-of-day close above the 50-day moving average at 16.5 to then allow the shares to project up towards the top of that triangle at 27.5 pence as a 2 to 3 month time frame target. But the key here, I think, is that we hold that higher low for the second half of this month. Moving on to tertiary minerals, which I tweeted about yesterday. Still looking for it to break the resistance line there from February, and also the 200-day moving average at 0.24. If that can happen anytime soon, then one would expect 0.3 to follow quite quickly. The good news is we have a rising 50-day moving average. We had a bit of a bear trap below 0.2, which is also a positive, and we've got an uptrend line in the RSI window. So it should be the case that fourth time lucky, or even fifth time lucky actually, we get up to 0.3. and snap the negative flow in the shares, which has been in place since the early part of last summer. On to Thor Exploration, which is looking interesting just in the sense that we're holding well above the rising 50-day moving average. That's around the 16 pence level. The top of the triangle here up to 24 pence, and we expect that maybe as soon as the end of next month. Valerix, also interesting from a charting perspective. Here you can see that the shares are nearly closing that gap down that we had back in the early part of this week at 26.5 pence. End of day close above that, and we could be on our way back towards the better levels of the last few months, as high as 34 pence, so maybe by the end of next month. Just finishing off with the stock which I missed out at the beginning, that's Arrow Exploration. Relative newcomer to the market. Here we've got a rising trend channel, well, broadening triangle actually, rather than a trend channel, That's been in place since the turn of the year, and above the 50-day moving average at 11 pence, we're looking for the shares to hit the top of that triangle as high as 20 or even 21 pence over the next 6 to 8 weeks. Let's see how we go with that. That's it for me today. More updates over the weekend.